Hello, hello. Welcome to my channel. It's January 13th, 4:30. That means it's time for a live show. I have a special guest and a special topic today. But before I do that, I wanted to welcome you again. Happy New Year's again. Can't believe it's January 13th. Almost half of January 2025. Wow, what did I do in the last 13 days? Hasn't been really productive. Hope it's been productive to you. But anyway, we are going to talk about a topic that is very important to me and to my clients and a lot of the people I talk to, specifically buyers and sellers, and that is brace yourself. What is the impact of property taxes and insurance? And now it has become even more dear to me, more important to me for this topic because we are going through those fire disaster as we speak. Of course, I'm in Orange County, about an hour from where the fires are, but my heart goes out to all those residencies, all those firefighters, all the struggle that is going through, and we're going to see how that is going to impact us. So we'll discuss all of that as we go along. But let me bring you to the live Adam Miller. He is a realtor in Florida, Lakewood Ranch. I'm going to bring him on stage. I've known Adam since a couple of years online. We are in the same organization on YouTube as we learn about YouTube and videos. I also met him personally in Dallas last year in July, or was it in August? I forgot.
I think it was August.
August. So Adam, introduce yourself. And since you are from Hawaii and you moved to Florida a couple of years ago, tell us a little bit, what was the impact of the fires in Lahaina as we go along, as far as insurance and as far as the people's life, how they were affected. So take it away.
Yeah, I gotcha. Well, first of all, thank you for having me on your live stream. I'm super excited. Yes, we know each other from the YouTube realm. We both, I think, try to surround ourselves with YouTubers who are doing well and you can learn from. So and we met in person at Vid Summit, which is a fantastic event, one of my favorite events.
Right.
That we take, that I go to. But yeah, so I lived in this area, Lakewood Ranch, which is about an hour south of Tampa, about 20 minutes inland from the Gulf of Mexico. And I lived here for about 11 years, sold real estate. And then my wife and I moved to Maui, Hawaii for 5 years. And we left right after the fires. It wasn't the reason that we left, but it definitely had a massive impact. We had clients who obviously lost their house during the fires. We had friends who lost their house. We had a fellow real estate agent who passed away in the fires. Oh, and it's just like in California. It shut down the real estate market. So if you had a house for sale and you burned it, it's no longer listed for sale. Right. Real estate agents potentially could have lost their house and, are not in a position to continue working. And, Maui was a little interesting because a lot of the buyers don't live on island, and it literally just kind of shut down the real estate markets.
Wow.
It was tough. And
how did it impact their daily lives? And I'm sure it was thrown off as far as the whole town got burned. Where did they stay? How was the food? How did they go to school? Just a little few, so you understand. And I want to know because some of my friends live in LA. Nothing has happened to them yet on the house, but at least 4 of my friends, who I know them very well, have been evacuated.
Yeah. So everyone was displaced for sure. And the biggest challenge having this happen on Maui is that regardless of the fire, there's already a massive housing shortage.
Correct.
There is not enough housing for the people who currently live there. So with some government help, they obviously shut down a lot of the vacation rental by owners, Airbnbs, and they put people up in those properties. They shut down a lot of the resort hotels and put people up. And you're talking about for months, there's still people staying there. And then finally, they're at the point of bringing in, unlike everywhere else, you have to ship in housing, portable housing. So they're doing that. The kids were displaced from school for a long time. A lot of them went to other schools on the island.
Okay.
And then what was your other question?
The question was like, just daily life, how it was affected. What about the finances and the food and the medications? It's a whole disruption. I can't imagine. And this topic is also dear to me because in 2004, I had a house fire. We had to leave. We were out of our house for 8 months and we stayed in a rental.
Wow. Yeah.
So I know what they go through as an individual basis because I've gone through it myself. I know how much my insurance was affected. but I could not imagine and I cannot fathom how much destruction there is, as thousands of, you're talking 5,000 6,000 homes burned. I can't
Yep,
imagine on a mass level how the government will take care of it, or the individual will take care of it, or the city. And I'm trying to grasp that. And then we'll
yeah,
talk about the effect it'll have on us next year or
for
6 months
sure.
later.
Yeah, great point. And I'm going to gather that California will do a much better job than Maui,
Mm-hmm.
just because they have a lot of infrastructure. The infrastructure is already there. Where on Maui, it's got to be brought in,
Mm-hmm. Correct.
which means people flying in, right? The Red Cross and all those things. But it was a little chaotic because from the
Okay.
very beginning, first of all, they were trying to find people, and then from our standpoint, I mean, real estate was shut down, so we had no real estate business to do. And for us, just my wife and myself, who's a real estate agent, we were just focused on how can we help, what can we do, because we weren't working, so work was just done. What can we do as residents,
Mm-hmm.
citizens, to help?
Right.
So the good thing about a small island, it's pretty easy to connect with somebody who's somebody.
Right.
So, and at that time, we had a really phenomenal YouTube channel,
Okay.
and
Nice.
a lot of people who wanted to help. So,
Mhm.
from the get go, what we were doing was we were figuring out what was needed: feminine products, diapers, clothes, food, and
Right.
then we were just doing videos and emails and texts, and people were sending them to our house,
Mm-hmm.
and we were getting those distributed to wherever it needed to be distributed. That sounds great in theory, but we had so many people wanting to help that I was getting, hundreds of boxes of stuff delivered every day.
Right.
Not great.
Yeah.
Great.
Yeah. I just
Great.
heard on the news on my way back home. I just heard on the news that, hey, it has been so nice that so many people, they put out a quote bulletin that we need clothes and this and this. Now at the convention center or the Pasadena Convention Center or the Rose Bowl, now they have so many clothes. They said, don't bring clothes anymore. What we
Yep.
need is baby products,
Yep.
diapers, ladies products, food,
Same thing. That's what we were
medicine.
doing.
They don't
Yep.
need clothes anymore. So change of, because even I myself gave, one of my friends emailed me and said there's a temple, an Indian temple, collecting whatever you can. So we gathered up a few bags of clothes that we had, blankets, whatever we could, we put it in there. But now they're saying they don't want any clothes. I mean, they can still use it, but more
Yep.
importantly, they need diapers, baby products, ladies stuff, or
Yeah.
whatever,
Same
food,
thing happened to us.
medical.
Yep.
Exactly.
So
Yeah.
we chose to instead, because it was really nice of people, but it really wasn't saying, like, we couldn't get into our place because there are boxes stacked up,
Right.
20
Yeah.
feet high. The
Right.
Amazon
Right.
delivery driver, FedEx did not love it. So we started to
Right.
do a Venmo instead. And then we
Okay.
got money, and then
Right.
we either bought stuff or got the money to the appropriate people.
Right.
And
Okay.
we were, my wife and I both cook. So we were
Oh, okay. Uh-huh.
cooking food for 150 people at a time,
Wow.
and bringing
Okay.
it to the church and to the,
Right.
but yeah, it turns everything upside down, and I'm sure the same thing's gonna happen in California.
Yeah. It's not an easy one. But let's start with an article that I want to read and come back to our topic, which is, it is our topic, but I want to go a little bit deeper rather than just talk about the fire. What impact has the fires had throughout the years, and what impact this fire will have in California? And I'm in California, so I'm talking about it, and I'm seeing it on the news, on the social media. Everybody we talk to today, at the office, at the friends, whatever, it's fire, 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 fire. There's no other conversation. So it's fresh in our mind. But what I wanted to talk about today, and I'll read this out. Let me go to my bigger screen so I can see it. Let's see here. So we're talking about, let's go back to the property taxes, and we'll come back to insurance. So first, I want to talk about the property tax and what it is doing today to the average consumer. Different states have different property taxes. A lot of the owners have been in their houses for years and years and years. And states like Texas or Nebraska, they can increase their property tax by 50%, 20%, 30%, from what I'm finding out. In California, they don't do that, at least in Southern California, because we have the Prop 13, the Howard Jarvis proposition back in the 86 or so, and they cannot increase the insurance rates only like by 1 or 2% per year compared to 10, 20% per year. So I want to see the impact that the property tax is having, and we'll come back to insurance later on, to the homeowners overall. And this article is from CoreLogic, 2024 property tax balloon causing sticker shock for the homeowners. By the way, are you seeing this on the screen, Adam, the
Yep.
report?
Yep.
Okay, good. So I'm going to just read through it. Property tax bills are another reminder of affordability challenges in the housing market. After years of struggling to find a home in the nearly unattainable California housing market, Caroline began looking for a path to homeownership outside the state. She found a dream solution just outside Phoenix. The city's abundant selection of large new homes, the relatively affordable prices compared to other major cities, and a property tax rate of 0.43, one of the nation's lowest, was unbeatable. Blah, blah, blah. But what they're saying is it went up. Counties in Florida, I'm going to jump a little bit going down here. Counties in Florida, California, and Texas, three states that are continuing to see people move in and push up housing prices over 40%, have had property taxes rise over 30%. That is absolutely, to me, ridiculous. And I'm sure the city and the government have to do what they have to do. But property increases of 20, 30% is a little bit too much, I think. What's happening in Florida as far as property taxes goes, or if you heard of states that has impacting so much? And I bring to Florida because I know the insurance is impacting a lot, and we'll come back to that.
Yeah, the taxes, it's kind of that catch-22, right? When you're a seller, you obviously want your home value to go up. So when you sell your house, you can make more money. The challenge is that the counties come back in and reassess the value of your home. And when they reassess the value based on a higher price, let's say last year it was assessed at $500,000, the prices go up. Now it's $600,000. You get taxed on $600,000.
Right.
So between, the cost of goods, just general inflation and insurance, and then taxes, it hits everybody.
Right. Yep. It sure does. Let me switch to another slide that I want to share, if I can. Let me go to my present, share screen. Maybe I don't have it.
Now the taxes where I live are slightly lower than the median average around the country, as well as in Florida.
Right.
But that doesn't mean that overall it doesn't have a financial impact on just about everybody.
Right. Okay. Cool. Okay, so this is the slide I want to share. It shows here that across the U.S., property taxes for single-family residential properties are up by 5.1% from 2023. Somebody on a fixed income who bought a house 5, 6, 7, 8 years ago, that's a big increase, because you may have your property and your property principal and interest fixed, right? But we're finding out that taxes and insurance, we knew all around that it's not fixed, because that's what changes your principal and interest and tax and insurance, what we call the PITI, every month. What's happening now is the insurance and the property tax are jumping significantly, especially in states like Nebraska. I didn't know, but the Nebraska taxes are horrible. Texas can increase rates also. Let's look at this chart. It shows here, the first is Arkansas and Arizona, Arkansas, Alaska, California. 2024 median property taxes. This shows on a single family home what the property taxes are. Remember, a lot of these homes have been bought 10, 20 years ago, so their base is low. But look at the increase since 2019. See this chart here? 18% increase in your property tax just in the last 5, 6 years. Year over year, that means from last year, if you look at, I think AK is Alaska, is it?
Yes.
Okay. 3.7%. If you look down at DC, the year over year property tax went up 6.4%. That means a lot if somebody on a fixed income or limited income. Since 2019, it has gone up 30%. Look at this, Kentucky, 30% increase in property taxes. That's not counting your principal interest, and we're not even talking insurance yet. We'll get to insurance shortly. So what it's showing is, and here's the tax rate, which is very important. California, the tax rate is 1.21%, which means that if you buy a house for $1 million, you're going to pay 1.21% per year on property taxes. And then every year it goes up by 1 or 2% off the property tax, not of the purchase price. Like I've been here in California. I bought my house 25 years ago. I'm paying taxes of about, let's say, as an estimate, $6,000 a year. The increase is on 1.1 or 2% on that 6,000 and not on your purchase price. I just want to clarify that so that people understand. And home prices have grown in 2019 to 2024. Look at this. Let's go back to California, for example, right? No, let's go back to the 30%. DC, the increase in insurance or property tax was 30%. Just in 1 year, it went up 6.4%. And then the home prices have gone up 15%. That means if I'm a new buyer, I'm going to buy a house compared to last year, a $500,000 house will cost me 15% more, number one. So I'm paying higher price. I'm paying higher mortgage. Now I have to pay higher property tax because your property tax is based on your purchase price. And then every year it's going up on average by DC, it's going up on average almost 1%. So what's happening is this is causing what I want to discuss about. And one thing I want to point out of this whole session is that, and I'm going to show you a slide if I can. In fact, let me bring it up and then we'll discuss that. I don't have that slide, but I'll show you. What we want to discuss is that the property tax and insurance used to be 30% or 20% of your mortgage payment, right? PITI, principal, insurance, tax, and insurance, principal, interest, tax, and insurance. Now that tax and insurance is getting higher and higher to the point that in a few years, your principal and interest and your tax and insurance is going to be 50-50. We are getting there, 30-40% of, So have you seen this or have you heard this from buyers and sellers? Is this a concern, Adam, to the general buyer and sellers that you talk to?
Yeah, I mean, interesting thing. I mean, what Florida is seeing is obviously a lot of people moved to Florida during the pandemic, right? It's one of the states that was, wide open.
Right.
And at that time, it seems like it wasn't that long ago.
Right.
But it was significantly more affordable just a few years ago.
Right.
And now people are here finding out that, obviously cost of goods have gone up, right? Your groceries, your gas.
Right.
Taxes have been going up and insurance has been going up. And now all of a sudden people are second guessing moving here because it's not really much more affordable than it was wherever they came. And we are seeing people leaving the state of Florida for that reason.
Okay. Yep. Yeah. I've heard that a lot of people are moving out. I mean, it used to be, there was be a net positive growth into Florida. The last couple of years, we've seen a negative growth and it may get even worse. That's what I'm hearing.
For sure.
Yeah. Yeah. Let me share another screen if I can. I want to show you one more thing. Okay. Let's see. Okay. Now, why did property taxes go up in 2024? And I want to show you some of the states where there's the biggest tax increases by state. Property tax rise alongside home prices. While some areas of the country will always be more expensive than others, the national trend towards more expensive properties and a greater property tax liabilities is clear. Already the tax bills climbed on average 27% from 2019 to 2024. These are tax bills we're talking about. Short of government-led changes, homeowners will continue to contend with rising property tax year after year. At the same time, how much property tax can increase per year depends on where you live. So it pays to consider an area's property tax burden before buying a home. So this is why I want to share to you biggest property tax increases by state. If you look at Georgia, Georgia's median property tax bill increased from 2019 to 24 by $743. 52.9% Colorado property tax increase in a state with the third lowest U.S. property tax rate. It was the lowest, but it has increased by 52%. If you look at Texas, the black triangle, Texas ranking in the U.S. for most expensive property taxes.
Wow.
Everybody's going to Texas, but they don't know that property tax they can stick it to you. And they have. I've talked to some clients, they moved to Texas, and they said that I did not know that the utility bills are so high. The AC is running 24 hours in the summer, and the heater is running 24 hours in the winter. So they got a shock when they found out it's high. And then if you look at the Florida, number 20, Florida is ranking in the U.S. for most expensive property taxes.
Yeah. If you look at that chart, look how much home prices have increased. 73%. It's the highest on the screen there.
Yeah. Florida has gone up since Since when is this? To the home price from 2019 to 2024,
Yep,
almost double. Can you
73%.
believe that?
That's incredible.
That means a person who bought 7 years ago or 6 years ago, 2019, his home price is lower, his or hers, and the property tax are lower. So if I come and buy what you bought in 2019, Adam, I'm going to pay 73% more in your on your house. At the same time, I'm going to pay more on property taxes.
Yep.
But
When
that's
we when
nothing
we
compared to what's happening of insurance. So tell me,
yeah.
let's talk about insurance specifically in Florida. And you know more about it, but I know and you know that there's a big insurance crisis in Florida. What can you tell us what's happening with the insurances, specifically after that building collapse, that condo collapse that we all saw on TV?
Yep.
And what is the impact of that on a regular homeowner, specifically condos over 3 stories where there's assessments on HOA and assessment fees? And you
Yeah.
take over.
So,
I know there's a lot going on.
yeah. So those are a couple different topics, and I am blown away by what has been allowed in the state of Florida, because I've been on a board of directors of a homeowners association. I was the vice
Oh,
president.
nice. Okay.
So I understand about um, special assessments and having reserves. And it is mind blowing that in the state of Florida, they at homeowners association are not required to put aside money in special reserves for things, first of all, that you know are going to happen. Unlike a building collapse is one thing, but you will need to replace a roof, and you might need to replace plumbing, and you might need to pave the driveway or do something. So if you don't put aside that money in reserves, you get hit with a special assessment. So that means, and that's what's happening in Florida. Now they're being forced to put aside that money. The repair things are that's a whole other conversation. But now condos are being forced, homeowners associations are being forced to put aside money for those projects, which it sounds terrible, but it is a great idea, because there are some things that are predictable: the roofs, the electric, the plumbing, painting, that you don't want to, you want to pay for that little by little by little by little, so that in 30 years, when you have to replace the roofs, you have $1 million in the bank, and not making the homeowners pay all of a sudden, an extra $1,000 or $5,000 or $10,000, whatever that number is. So that's having a big impact. And of course, with the hurricanes, a lot of the insurance companies left the state of Florida. For them, it's kind of risk reward.
Right.
And then there were 3 hurricanes, and the risk did not outweigh the reward. And all of a sudden, they had to pay out a lot of money, or maybe didn't pay out a lot of money. So a lot of them left the state.
Wow. Okay. So I'm hearing, I saw a YouTube video, because I watch a lot of YouTube videos from real estate experts, real estate analysts, statistical companies, so that we are up to date, so we can pass on the information that we have, relevant information. I saw a YouTube video where there's a lady, she's 72 years old. She was in this condo, older condo, 25, 30-year-old condo complex, 10-story, 12 stories. She's been there for 25 years or 20 years, fixed income. She's been paying her taxes. She's been paying her HOA. She's been making a good living, doesn't bother anybody. All of a sudden, last year, she had to leave for several reasons. Number one, flood hit them, and her condo was damaged, blah, blah, blah. She could not fix it or whatever, because there was window damage or whatever. Association was not paying for it because they had too much damages and they were not doing it. While this was happening with the Florida policy that came, I don't know, 541 or something, whatever it calls. Now they have all the condo buildings that are over 3 feet, over 3 stories, have to be reassessed to code, whatever. You have to bring it up to par within the next couple of years. So the association did not have reserves, like you said. They're supposed to. In California, there's a reserve required for all HOA companies and property management companies. They did not have it. So there was about 70, 80 units in that complex, and each one got assessed $23,000 upfront. They have to pay to do the repairs. At the same time, her HOA jumped from $200 to $1,500 a month. Now she can't pay, and she's going to walk on the house. She can't sell it because nobody can afford it, because when the lender goes, oh, association is $700, you can't qualify because HOA is part of your expense. It knocks you out. So I can't sell, I can't fix, I don't have any extra income. I'm on fixed social security income. What do you want to do? Kick me out and she'll walk out. That's the
That's what's
sadness of
happening.
yeah.
People are leaving their house because
Mhm.
it's just not worth it.
It's cheaper to walk out than where is she going to get
Cheaper to walk
$23,000?
away. Yeah.
Yeah.
Yeah, it is unbelievably tragic how that is happening. And a lot of places, a lot of people don't have insurance who got hit with storm. They either didn't have flood insurance because they either didn't need flood insurance,
Okay.
or they just chose not to have it or couldn't afford it. So
Mhm.
there are lots of people whose house got damaged or devastated and have no
Right.
insurance
Right.
and almost have to walk away because there's nothing you can do.
Right. Right. So let's talk about insurance and let's talk about Florida insurance. Let me bring up a screen here. Can you see that screen?
Yes.
Okay. So most expensive states for homeowners insurance in 2024. I hate to see it, but look at Florida.
Yep. It's crazy
10,000 on average.
on average.
On average. Not average. I mean, 10,000 is Florida, but I think the average insurance, if you looked at the slide earlier, it was about 2,800 or something on average, talking at other states. Of course, California is higher because of, if you look at other states, but look at that $10,000 per year in insurance. Louisiana, 6,000, Oklahoma, 5,000, Texas, 4,000, Mississippi, all these states. And this is just about, and this was, by the way, in 2023. I'm sure in 2024, these figures are much higher, especially in states like Florida and Texas, Oklahoma, Nebraska. You know what I found out today? Of all the states, why is insurance so high in Nebraska? Do you know, Adam? It will blow you away. There's no fires
I
there.
can't even imagine. I mean, they're
There's
in
no
Hurricane
fires and
Alley.
there's no, there's no fires and there's no floods. But you know why the insurance is very high in Nebraska?
I'd say hurricanes
Hailstorms,
or
hailstorms,
tornadoes,
hailstorms
hailstorms. Yeah,
on the cars and the buildings and all that. Just
interesting.
for one reason. That's one reason it's so high.
Very interesting. Yeah, I
Um,
mean that insurance in Florida is scaring people. And if you're going to get a loan on a house, you're going to have to get insurance.
and the insurance is a factor. Lenders look at the insurance, especially
Yeah, of
today.
course.
Lenders are looking more precisely or more, what do what I call, looking at HOA fees and insurance because it has gone up significantly. And HOAs is your taken into the debt to income ratio, right? They
Yeah,
do
of
look
course.
at it.
Yep,
Yep.
yep.
Just like property tax, they
And those
look at the
fees are
property
going up
tax.
too, to your point, because now homeowners associations want you to be prepared for your fence getting knocked over or light posts getting down. So they're charging more so that they do have those reserves to take care of damage that we know is going to come.
Right. Right. Yeah. Yeah. So what's happening? I mean, the whole point of this conversation today was several things. Number one, buyer beware and sellers beware. How it is impacting sellers? It's about the lady that we talked about. She's been there making her payments every month, never been late, paying her HOA, paying her tax bills, paying her utilities, being nice to her neighbors, making a decent living. One hurricane comes, two hurricane comes, three, four within few months, changes her whole life. And
Yeah,
these
and
disasters.
because of the storms here, insurance companies now, I'm going to read this because I kind of wrote this down. Insurance companies cannot deny coverage based on the age of a roof that is less than 15 years old. However, when the roof does reach 15 years, it has to be recertified. So, and one of the challenges is that if you have a roof that is almost at its end of life, um, it's going to have to be replaced because otherwise a buyer is not going to be able to get insurance on it.
Okay. Because of the roof. Okay.
Because of the age of the roof.
Right. Right. Okay. How expensive are the roofs over there to replace one?
Very expensive.
On average, I mean,
depending on the type of roof that you had. If you just did like just a regular, you can do regular tile, you can do metal, you can do barrel tile. I mean, it can cost you, 20 grand minimum to do
yeah, that's what I figure.
house.
Yeah.
Or it can cost $100,000 depending on if you want to do. But it's not required yet. But insurance companies probably are not going to continue to allow just regular tile. I don't know what the terminology is, but regular tile roofs, you're
Right.
probably gonna have to get metal or concrete or some kind of
Right.
composite.
Yeah. And when they replace a roof, let's say when they recertify a roof and say, hey Adam, your house is older, you need to change your roof, who pays for that?
You pay for that as a homeowner.
Insurance won't cover that, right?
No, insurance is not covering that. Yeah.
Right. What about
Yeah.
flood damaged roof? Like let's say there's a hurricane and blew your roof away or whatever. Is that covered or?
Yeah, it's interesting with the flood insurance. I mean, you got to love and hate insurance companies when they
Mhm.
say, the
Right.
specifications on what's covered in flood insurance is
Right.
so specific. Like if, a river flooded and your house flooded, that might not necessarily be covered with flood
Right.
insurance. Or if it was, you just got 18 inches of rain and the whole neighborhood flooded, not
Right.
technically flood insurance. So that's why a lot of people don't get the flood insurance. A lot of people in this area were damaged, even though
Mhm.
they are not in a flood zone and not required
Right.
to have flood. But you get 18 inches of rain in 24 hours. There's nothing you can do.
Mhm.
The storm drains are not meant for that.
Right. Yeah, it's
But
devastating.
insurance doesn't cover it, and then you
Mhm.
have all your stuff all
Yeah.
ruined.
Yeah. I want to share another screen talking about, let me see if I can get to the screen. Share screen. Um, okay. Okay. Can you see the screen? I'm going to read it out from there. This is about what's happening with Americans worry extreme weather could hurt retirement savings, but few are prepared. And this is exactly what we're talking about, Adam. Especially the seniors, the people who have been there a long time, their fixed income, depending on the area. Here are the takeaways from this article from Investopedia. 1 in 4 Americans said in recent survey that loss of insurance, risk of rising cost, or damages due to natural disasters were among the top risk of their retirement incomes. I'm getting there. I'm retiring pretty soon, and I have to look at this. I never thought of it that way. More than half, 56%, have anxiety about how extreme weather could affect their finances or health, but only 10% of those have discussed the concern with a financial professional, according to the survey from Alliance Life. Only slightly more than third, 36% of the respondents who have faced extreme weather events have taken into consideration the implications of extreme weather in their retirement planning. Homeowners insurance premium have increased as extreme weather events have occurred more frequently. This is life changing and life threatening. I mean, I don't know how old are you, but I know I'm older and I'm getting there in the retirement age. I never thought about weather as something I have to consider.
Yeah, if you think about all the things that you want to plan for retirement, right? You want to make sure you have money for health insurance, maybe for a
Mhm.
vacation, maybe to do miscellaneous things around your house. But a tragic event like a fire or a hurricane or a tornado, you don't really prepare for just because they
Yeah,
happen very rarely. But you can tell the country is definitely worried about natural
right,
disasters because no matter where you are in this country, there's
right.
something.
Yeah. Hey, Adam, we got a couple of comments. Maybe I can read it out. You can answer it or see if it's
Sure.
just a comment. It's from New Leaf. Thanks, New Leaf One. I know that's not your name, but that's the title of your channel. Thanks for watching and commenting. Uh, by the way, if you're watching, if you have any suggestions or see what's happening in your area, because this is a nationwide a live stream, please make us your comments. If you're watching this as a recording, comment afterwards. We'll be glad to answer any questions or concerns you have. But let's read at the comment that New Leaf has. Nominally, it makes sense. Devastating fires and flooding, increasing in insurances. Here's the thing, everything is tying into you will owe nothing. It seems too convenient to Pat. To be a coincidence, it seems orchestrated. So it's a comment that he's making that, hey, everything, let me read it again. Everything is tying into you will owe nothing. Makes sense. I mean, all that we earning sooner or later is going to be gone, right? I mean, into
Yeah, I
expenses,
mean,
into emergencies, and can you make more comments on that, New Leaf? If you're still watching, kind of clarify or make more comments on it and make us understand where you exactly getting into. But we do appreciate your comments and look forward to more of your comment. In the meantime, going back to Adam, I read you that article. Let me go back and put this. Americans worry extreme weather could hurt retirement savings, but few are prepared. Did you ever consider retirement weather as a relationship there?
No, but it would be what I'm interested to see if this is going to happen, and we haven't seen it yet, and it's going to be hard to quantify it, but
Hmm.
I'd be interested to see how many people who live near the water, the Gulf of Mexico,
Okay.
who were devastated at least twice, possibly three times, depending on where they are on the water.
Hmm.
If they are potentially going to either fix their house,
Hmm.
rebuild their house, and move either out of state or potentially inland in
Right.
Florida, just because they don't want to have to deal with a flood. Because as you know, we had three hurricanes back to back to
Right.
back.
Hmm.
Two of them hit specifically in the Sarasota, Manatee County area.
That's where you are,
Um,
right? You're near
yeah,
Sarasota.
that's where we are. Yeah, about an hour south
Oh,
of
okay.
Tampa.
Right.
And it was devastating because a lot of people, didn't even recover from the first hurricane. Still had, their damaged, ruined goods on the street, ready for pickup, and then just got
Right.
hit with another one. So be interested if they fix it or walk away and move inland or potentially out of state.
Right. Right. Okay. Yeah. And I think one of the savings things we may want to do is, of course, they all say, put away money for your retirement, your health, and this and this. Now we need to worry about weather, a devastating damage. I can only imagine all these people in LA who have been misplaced. Almost what, 5 or 6 thousand homes have been burned.
Yeah, a lot.
A lot of the people have been evacuated as a warning. Thank God it's just a warning and the house hasn't burned. But imagine having no savings or no money, extra money. Now you have to pay for a hotel, or your car is burned. You have to go to work. You may have to take public transportation. I'm concerned about them in the sense I wish I can do as an individual, but I hope the FEMA and the government, the LA County, LA City, California does something for these people immediately, because I look at all the kids. Where will they go to school? They have to buy new clothes, new
Yep,
medication.
all of that.
It's a shocker. And like I said, I've been through it on an individual basis. I mean, for 2 or 3 weeks, we were just shocked. We didn't know what to do when our house got burned. First of all, we were scared. We had inhalation of the smoke, so they affected our lungs and all that. We could not wear those clothes because when the clothes smell that bad, you can't wear them. It's not good for your lungs. So we have to
Yeah,
buy new clothes.
yeah,
They
you got to
told us,
write. Got to
don't
buy
wear
new
any
clothes.
of, don't bring anything out. So
Yeah,
we could not touch any food because of the smoke. That smoke is so toxic. In fact, just because the smoke was upstairs, but we had to paint the whole house, and not just paint. We had to do a special painting because the smoke gets into the wall and the carpets, and
yep,
that's very bad for your lungs. We had to take out the carpet. We had to take out the paint, do some deoxidization or whatever you call it, then paint.
yep. Then
All our
paid.
clothes,
I
all our
spoke to
clothes went to laundry to be specially laundry. It cost $18,000 just for our laundry bill,
holy cow.
because the smell does not go with a
Smell
regular
does not
laundry.
go
You have
away.
to
Yeah.
do, yeah,
Yeah. I've got a friend who
18
works for
grand.
like one of those
Yeah,
remediation companies. They do like water
yeah,
damage, fire damage.
yeah.
And she said that they had to bring in 1,000 people from outside the state
Right.
just to help them with that remediation
Yeah,
after
yeah.
the floods.
It's a disaster. And I'm just uh, worried that these lives have already been displaced. It's already a shock for them to lose the house, but more shock is coming as you do your daily lives, because you're going to be out of that house for 2 or 3 years.
Yeah. I mean, the Maui fires were,
Yeah.
August of 2023, and there are still people who are displaced, and they just now
Yep.
started to build, I think, the first house.
Right. So I'm going to switch some gears, and I know we've been sounding negative, but we want to give facts. What I want to do is switch some gears, and what can we do about the property taxes? If I'm a homeowner, if I'm on a fixed income, is there anything I can do about property taxes? I'm going to talk about suggestions for homeowners, what they can do, and we'll discuss this. There's 4 things we can do, and let's take it one thing at a time. The first thing you can do is you can appeal your assessment. If you feel your property tax is too high, you can appeal it. So it said, review your properties assessment and challenge it if it appears overvalued. And then many states offer formal process for appeals, which can save homeowners hundreds or thousands of annually. Adam, how would you do something like that in Florida? How would you appeal?
Yeah, it's the same. I don't know if that is a federal law, but you absolutely can challenge your appraisal. And
Mhm.
quite honestly, I would do it no matter what.
Right. Exactly.
I'm not an
I should
attorney.
do
That is
that. I
not
should
legal
do that.
advice.
Yeah. Uh-huh.
That's right. I'm an attorney, not legal advice. But I would say no matter what it is,
Yeah.
just go and
Just go and do it. Yeah.
see if you can fight it. And if you lose, you lose. It's even
Yep.
better if you have some actual data
Yep.
that can show what the value is.
Right.
But home prices are starting to go down. Not everywhere, but I
You
know
can
in
appeal it. Yeah.
yeah, it's in our area. I just pulled up the stats, and the median sale price dropped 11.5% over the same time last year, and the average price dropped 9.4%.
Wow. Okay.
So I
Yeah.
would be reconsidering my tax bill
Yeah.
and seeing what you can do to get it lowered.
And one of the easiest way to get a review on a property's assessment is guess who? Call a realtor. Anybody you know, anybody in your town, call me or Adam will refer you to a realtor. They'll give you a free analysis of your home. You can take that. There's a form you can get at your county assessor's office. I'm sure in California, I can go to the website and there's a form. Your realtor can help you with the numbers. This is a free service. At least I won't charge you. And if I refer you to a realtor that want to give you a free assessment, they won't charge you either. So hit up Adam if you're in the Florida area. But that's one way. The second thing you can do to appeal is research exemptions. What that means is look into exemptions for seniors, veterans, or low-income households. For instance, Texas allows certain exemptions for disabled and elderly homeowners. I found out today that if a veteran is 100% disabled, they don't pay any property taxes if they know that.
Yeah, that's great.
That's good to know because I didn't know that, but now I know that some seniors with medical issues or low income households, they don't have to pay or there might be adjustment, which is good. So call your county assessor's office. Each state, each county has their own regulations. So what may work in Florida may not work in California. So check it out. Worst case, talk to a realtor. They may know or they'll get you resources. The third thing you can do, and this one is consider relocation. Hey, if property taxes are a primary burden, consider moving to states with lower property taxes. Example, Hawaii, South Carolina, or Alabama. Did you know that Hawaii is one of the lowest states? I mean, the lowest property tax states
for
of all
residents
52?
for residential. So I know,
Residential, of course, right?
yeah, not vacation rentals. They try the state and the county try to do the opposite. It's just like
Okay, so this is for
jack
owner
those up.
occupied.
Correct.
Owner
So
occupied.
for residents, so our condo, I think our annual taxes were like $600 a year.
Oh my God, why is it so low? I mean, that's good, but I mean, just curious,
One, Hawaii is very expensive, and it's an incentive for people to actually live there and own property as opposed to a vacation rental property. So it's
Oh, I
kind
see.
of a benefit and a reward to do what they can to keep taxes as low as possible for people who live and own a house.
I see. Okay, that's good to know. What if I buy a house as a rental, long-term rental, not a short-term Airbnb? Is it the same, a property tax? So you have to be living in
There are
there?
multiple different tax rates. So
Okay,
there's that one, and then there's like the vacation rental one where you're doing it daily, weekly. So
right.
the tax rate for somebody who buys a home, it's still an investment property. It's more expensive than if you owned it for your primary resident,
Okay.
and less expensive than if it was a vacation rentable. Single family homes are not really vacation rentable on Maui.
Right.
But if it was a condo, that insurance could be like $8,000 or $10,000.
Right. Right. Okay. So what's your property taxes in Florida area or in your Tampa County where you
In
live?
Florida, Manatee County, it is 0.9 to 2% is the tax rate.
Of your property tax, of your purchase price. And then what is the increase every year on average or?
I think the cap is, I want to say it's like 3% is the
Okay. So you have a cap, not like Texas does not have a cap. They can increase it whenever they want to, so I know Nebraska, maybe not, but other states don't have it, So relocation is an option. Hey,
For sure.
For example, if you bought a house in California 3-4 years ago at $700,000 or $800,000, you can sell that today for $1 million and go someplace and buy a $3,000, $300,000 home and
Come to Lakewood
save
Ranch,
on.
Florida. You can buy something in the $200,000. You can buy something at $28 million and everything in between.
Exactly. Yeah. And that's one way of saving it. You know, you
Yep.
save electricity, you save utilities, your insurance will go down if you have a bigger house and buy a smaller house, you know. So, and the other thing you can do, this is suggestions for homeowners. The fourth thing is, I don't know if I say this or not, but I'll read it out since it's there. Engage in local politics. Wow. Participate in discussions about municipal budgets and tax policies to ensure taxpayer dollars are allocated effectively.
I
You
love
said
that
you were on
idea.
the homeowners association. What would you like to say on this aspect?
Well, from the homeowners association, they can't necessarily do anything about the taxes per se.
Mm-hmm.
But I know being on, so the homeowners association I was on, it was condos, but multiple buildings. There were like 60 buildings.
Mm-hmm.
So you know that there are those projects that will have to get done one day. Like
Mm-hmm.
we knew that we had to replace the staircases, right? There were two
Right.
stories and there were staircases.
Mm-hmm.
We knew that those had to be replaced. We knew some fences had to be replaced. So those were
Right.
always budgeted. You had to, you can do an estimate of what that's approximately going to cost, and then you can
Right.
kind of figure out the math.
Okay.
And then you have to get agreement. So our homeowners association is going to go from X dollar to X dollar. However, here's what that money's going to go for. If we don't do that, and then we need to replace it, then it's going to cost you, $1,000 for 4 years.
Right.
When that does happen.
Does that? Okay. Okay. Now, if we go to insurance, and I don't have any, I didn't do any research on the insurance, but how do I reduce my insurance? If there's a way, I know that when I renewed my policy 3-4 years ago, I actually talked to the agent, but now it's automatic renewal. But two things he told me I could do to reduce insurance is, number one, put an alarm system. That helps. And if you put a fire sprinkler system, which was too expensive, but on a newer home, it's required to put a fire sprinkler. But if you have a fire sprinkler system, it reduces insurance also. At the same time, in California, depending on the area, I'm in the close to the fire hazard zone. The zones by the state
Right.
has zones. So if I clear the brushes and clear the bushes, etc., I can reduce insurances. Can you think of any other ways that we may be able to reduce insurance in a way?
And again, I am not an insurance expert, but I would think that the type of roof that you have,
okay,
I would think maybe, smoke detectors of some kind. I know you can get, there are different types of window you can get that are hurricane proof. There's some that are hurricane with hurricane resistance. There are some that, have hurricane can withstand like up to 140 mile an hour wind. So the type of window you get could help with your insurance costs.
Okay.
Obviously, if you build your house on stilts, that can probably help your insurance, especially if you're near a body of water, a river, a lake, the ocean, the Gulf.
Right.
That could possibly be a way, but I would reach out to your insurance company.
Right.
What can
there
I
are
do
some ways you can reduce it, because I know my brother-in-law is in Florida, by the way, so I go there all the time. So I'm very familiar with Florida. And one of the things he did is, when there's a warning for hurricane, his windows are the type of windows you talk about. He has good windows. I don't know what kind, but they are the one that withstand a lot of wind.
Yep.
In addition, when there's a warning, he pulls down that metal thing in the front, pulls down the metal rod.
Hurricane shutters. Yep.
Shutters, and that helped insurance also. I'm sure that makes a difference.
Yep.
Now, there may be an upfront cost to it. If you have 10, like I have 25 windows, it'll be too many. But certain areas, those things help. So
yeah, I've got them on. Let's see, if I had to count how many windows I have that on, I probably have it on 8 windows on the house.
Right.
Yep.
Okay. Are you a single story, double story?
Single story. Yeah.
Single story. Okay.
Yep.
Okay. Cool. Okay. All right.
It's good information. I hope the viewers are enjoying it and getting some good nuggets.
That's the whole idea. I'm learning something myself, but that's the whole point of this conversation, is that, hey, if I talk to another buyer, I know more today about insurance and property tax than I did a couple of hours ago. And if you're watching this as a recording, thank you for watching. Please make comments. If you have any questions or suggestions, let us know, and we'll answer. Either Adam will answer right now, or after recording, I'll answer, and I'll reach out to you and definitely make sure that your questions or comments are responded to. So we'll be glad to do that. So I want to come back to the current events. We started with the fire in California happening right now, and our hearts go out to them today. We have more winds coming tomorrow and Tuesday, more winds 40, 50, 60, 80, up to 80 miles an hour, depending some areas. So they're saying, the experts are saying that hopefully they won't flare up or the old sparks don't come up and new fires don't start. So we're praying for it. And I sincerely mean that. I'm not just saying that for the sake of saying it. I've gone through this before, so it's very touching to me. Um, but at the same time, the fire is an evil in the sense now it's going to increase our insurance. Just because he's in LA, I know how insurance companies work. In fact, one of my good friends is an insurance agent. And we were talking about insurance because I was playing golf with him a few days back. And we talked about the fire. Remember, every conversation we're having the last 3-4 days is about fire, whether it's a realtor or a waitress or family, friends. It's all about fire, 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 and understandably so. So what they were saying is this will impact us.
For
And
sure.
and the insurance, it will go up because what I was getting at, the insurance friend was telling me that these insurance people have those guys who does math and statistics called actuaries or whatever. They can pin down the statistics where the fire is going to be and how much is going to be. And with this increase now, I know that there's a moratorium for them not to cancel insurance.
Right.
At least in the LA County, I think there is a freeze now where the insurance cannot cancel, and they cannot not renew. That's in place for at least 90 days from what I heard. Please check with your insurance agent. But there is a moratorium put so they can't cancel anymore. And if you have the insurance and if it's expiring today, they have to continue.
Yep.
And they cannot quadruple your rate. So that's the good thing that's happening. Check with your insurance. And I'm just saying by what I read and what I heard or what I saw on YouTube, but I'm just relaying it out. So there is some help out there. But what I want to get at is how much impact will these fires have on insurance? And maybe you know more, Adam, because I'm sure the floods in Florida has an impact on insurance, or has it yet?
Yeah. So a couple things. One, they can increase the prices for sure, or they are less likely to insure in areas that now they know are prone to floods. I mean, we got two back to back immediately in our area. So you kind of know, like, here's what's going to happen. If you're going to get 10 foot of storm surge, 15 foot of storm surge, here's all the areas that are going to get damaged. So they can decide to either not insure you, or they could say, yeah, we'll insure you. However, it's going to be, X dollar amount, significantly more. And it puts, you as the homeowner in a terrible position. Right. Get insurance or don't get insurance. I can't afford it. I'm not going to get it. I'll take the chance, if my house gets destroyed.
Okay. Did Florida have a moratorium? Like, hey, after the floods, I know it was what you and Ian and the Milton floods recently. Did they have any moratorium where they cannot cancel or not say, I'm not going to renew, or what happened?
I don't. I believe so. Don't hold me to that one, but I think there was a moratorium that they couldn't cancel any insurance.
At least in certain areas where they were hardly hit,
Yeah.
So yeah. So yeah, that's good to know. And I think the consumers or the buyers should know, because what's happening now is if I have a house in escrow right now as a buyer in LA County, make sure we have a good insurance, and hopefully it doesn't increase because you're a brand new buyer, brand new insurance, you don't have any history. So I'm wondering how much it's going to impact the new buyers, as far as
it will. I mean, we talked about it. You budget for your food, and you budget for your utilities, and you budget for the kids in school, and you budget for vacation, but you don't really take into consideration, like, how much am I going to need for insurance?
Yeah, but and I'm glad you brought this point out, Adam, and you mentioned this a second time. So I want to chat about that. You mentioned about savings for retirement or saving for emergency. I'm sure that there's a stat out there that more than 50% of Americans don't have any savings and they live paycheck to paycheck.
Yep.
So how the heck am I going to save if I'm living paycheck to paycheck, let alone have anything for medical emergency? Question number one. Question number two is, what do you do when prices go up and you have no savings? Where do you get the money from?
Yeah, I mean, there's lots of people having multiple jobs,
Right.
right? There's
Yeah.
lots of people, doing side hustles,
Yeah.
and this is a completely different topic,
Right.
but you sacrifice the food that you eat,
Yeah. Beans,
right?
right? What is it? What Dave Ramsey? What does he say? Eat beans and bread. Don't go to
Well,
restaurants.
you get people, eating at McDonald's because
Yeah.
it's cheaper, not healthier, but cheaper.
Cheaper.
Or buying garbage product from the supermarkets, and you can't blame it.
Hmm.
If I'm a parent and I have to decide between feeding my kids or saving extra money for insurance and feeding the kids.
Right. Yeah.
But if I
It's
can't
a tough
afford a
call.
steak and
Yeah.
potatoes, I'm getting
Yeah.
getting something less expensive, and probably less
Yeah.
expensive means probably not as healthy.
Yeah. Yeah. One of the things I was thinking about, because I was thinking of doing a video, is how do you start saving more? Because more than 50% of quote American, I'm assuming that's adult Americans, don't have any savings, not even $10,000.
Yep.
And they live paycheck to paycheck. So these are the people. I'm not criticizing these people when I say these. I'm not partitioning them, but what can we do to save money? We, in the sense, if I'm in that situation when I'm living paycheck to paycheck, one thing I can do, like you mentioned, is I can do a side hustle. I can do extra job. I can do overtime. So that's one way to increase the income, and then hopefully that income you can put it away for savings, or what
Yeah.
we call a rainy day emergency fund. But
Yeah.
I was thinking about it a few days ago, and I did a TikTok video, and one of the things I said, the easiest way to save money, very, very easy to do, is to cut your expenses. That's the
Yep.
first thing you can do. If I'm going to Starbucks, if I'm going to McDonald's and buying a large, I've never bought a super size large drink. I always buy a small one refill. If I'm going to eat in McDonald's, right? Why don't you buy a small one, drink it, and then take a refill rather than buying a large one? But I'm just saying there's other, or if you go to
Yeah.
Starbucks, and I use Starbucks as a name, it's a brand name, and pay $5-6 for coffee, make your own coffee. I go to work every day and there's a Starbucks on my way and there's a line there. And I ask myself, I know you're busy. I know you have to go to work. If you get up 10 minutes early or make coffee, you'll save $6 a day.
For sure.
And I'm not
Yeah,
criticizing. I'm just giving an example. That's $180 a month. That's your savings right there. And I'm not
Yep. There are
criticizing.
definitely people who could save. Yeah, definitely people who could save, but there's a lot of people who are not in a position that they can, they're not going to Starbucks. But it's interesting that we talk about this one because I'm working on a little side hustle right now. I'll share it with you and
Okay,
and with
sure.
your audience too. I like to
Right.
cook when I'm not selling real estate.
Oh, nice.
But
Okay.
I'm working on a cookbook, cooking on a budget, and it's been really fun. It's a long-term process. I have no plans on coming out with it right away, but I started to do some research because I put together some menus, and then I went to my grocery store, and I was like, what is, because off the top of my head, I don't do it enough to know, like, what is a 5 pound
Mhm.
bag of rice cost? What is,
Right, right,
what is a can of corn? And what can I make with, a 5 pound bag of rice, a bag of onions, and the potatoes?
right.
You can make some bulk meals, maybe
Mhm.
not for everybody, but chili and pasta, and do something really inexpensive and get 4 meals
Right.
or 4 servings for $20 or
Hmm.
less.
Okay. Nice. Okay. So what kind of cooking do you do? I mean,
A
fancy
little
cooking, dessert, baking, or
I don't really do baking, but my wife has been baking bread, which is
okay.
honestly much better than the store for sure,
Right.
uh,
Okay.
and very inexpensive. I mean, it's flour, water,
Mm-hmm.
salt,
Okay.
and some time.
Well, that's a good side
Um,
hustle. So in your case, your side hustle won't get you money right now. You'll get it 6 months later, a year later, whenever you bring out the book. So that's money coming in. So you're planning for your future,
Yeah,
right?
and quite honestly, for this one, it wasn't more about how much money can I make selling a book about cooking on a budget, but I was
Mm-hmm.
thinking of these conversations. I was thinking
Right.
honestly about family and people I know on Maui who are struggling, and
Right.
I take advantage because I know how to cook. My wife knows how to
Right.
cook,
Yeah. Okay.
um, but a lot of people don't know how to cook. So I think if I
Right.
can come up with uh, simple recipes that are really good, because I cook excellent food, but we don't
Right.
spend a fortune
Right.
on food. Like today, we cooked a pork loin. Like pork
Uh-huh.
loin is cheap. Most
Right.
people don't know how to cook a pork loin, but for the two of us, we're gonna have probably 2.5 meals out of that, and that was
Right.
probably $6
Right. Yeah.
with some rice. Big,
Yeah.
big bag of rice costs $4.
Yep.
That portion of rice is probably, 50 cents.
Yep. Yeah, and then I want to take it further. You're talking about side hustle. It just reminded me of there's an agent in my office. When COVID hit, we could not sell any houses because we couldn't go in the house, and the sellers didn't want us to go, and nobody's homes were not selling, so income dropped. Right. This lady, she's 72 years old, very healthy, lives on her own. Her husband passed away a while back. She has two adult kids. They live out of state, so she was alone, and she has no other friends other than her clients and things. So she started a side hustle. And you know what she did? She became an Uber driver.
Oh, nice.
And she said, Mike, I work in the weekends and maybe 3 nights a week, 5-6 hours a night when she has her clients. There was nothing going on. But she always looked at properties and did research. At that time, she was making about $3,000 a month
Wow.
on Uber driving.
Yeah.
This was just after COVID because, people did go to the airport, did have to travel.
Yeah,
So
no, of
she wore
course.
a mask, and she's 72 years old. So
Yeah.
she's very scared because she's 72. And then what COVID was going on. But, because she did not have any income, luckily her house was paid off. And she's a friend of
Great.
mine. She still lives in Anaheim Hills. She just needed enough money to pay other bills because she did not have savings. Like an average American, there's not enough savings. She did not want to get into her retirement account. She does have savings, but it was one of those where if you pull, you get penalized or whatever.
Oh, yeah. Yeah.
So she brought extra cash. So to your point, work extra, do a side hustle, start saving.
Do a little side hustle.
What we were talking about is easiest ways to cut expense. If you go to dining, if you're going every weekend, maybe you want to cut back to twice a week. And, sometimes when I go for dinner, I don't order the drink. I just yesterday we went for dinner, and I can afford to pay the drink, but I decided not to order the drink because the drink is $15. Vodka
50,
martini is
$50.
$15.
Yeah.
Then you add tax on it and tip. It's $20. Yep. I did not order the drink. We did not order the dessert. We just saved $30 by not having a drink, but we had a nice dinner.
Yeah, easy.
So little things we can do to save, and I can put that $20 into a retirement account or a savings account or emergency. Sure. So hopefully people will do it. I don't know why 50% of quote Americans live paycheck to paycheck, and I understand situations and scenarios, but you can always get better. And
I'm just as guilty. Yeah, I'm just as guilty. But there's a lot of do I need Amazon, Netflix, and Hulu? That's $200 a month.
Yeah, a lot of people. Like I was talking to a realtor today in my office. He has this TV service where it's internet and TV and everything, and he was paying way too much all these years. When the prices dropped, the TV company did not drop his TV price, but he found out today that he could have paid half what he was paying.
Oh my gosh.
Because when you start, say, pay for the TV and the cable and you get ABC premier channels,
yep,
they kept charging him $150, but that rate went down to $80. He didn't know about it, so the company kept charging $150. He just changed after 4 years.
That's another good way to save some money.
That's $3,000 he lost, and he was crying about it.
Yeah, of course.
Right? So little things we can do, and we're not financial planners. Talk to your accountant, talk to your financial, but I think we talk to a lot of homeowners and home sellers, a lot of people about finances, and we know from them what you can do. And there is ways, if you have your mind to it, put your will to it, put your efforts to it, you will save $50 a month, $100 a month, $1,000 a month.
Yeah.
There's ways. Call me, call Adam, talk to your realtor. We'll give you ideas because we talk to home sellers every day. We talk to home buyers every day. We talk about finances every day because the number one challenge for first-time home buyers is getting the down payment. We'll help you get that down payment. And the number one problem for sellers is, oh my God, I can't afford it. My payments are too high. What can I do? We'll help you save whatever we can. So we're here to help in a nice way. We don't need referrals to sell a home, but we are here to help you. So hit us up. We'll help you. Any other thoughts, Adam, about fire and insurance and floods that we can help the audience today?
Yeah, it's I think it's one of those things where no matter where you live, it's going to be something, right? Nebraska, it's hailstorms, fire, hurricanes, tornadoes. Yeah, it's part of home ownership. I hope interest rates do come down to make it a little more affordable. I would say go to your property tax appraiser and see what you can do to get that lowered. Whether you think it's too high or just right, doesn't matter. Doesn't hurt to ask. And yeah, see if you can do that one, and then talk to your insurance company. See what they can do. See what they recommend. See what they offer to help you save some money.
Right. And if you're a senior, medical, first responder, veterans with disability or whatever, talk to the local county assessors, see what they can do for you. Talk to your insurance. There are cuts out there. You just got to find them, Google them, Google everything, find out, talk to your realtor. I always say, go to your realtor. People don't want to talk to us because we think we're going to push you to sell. Hey, we can't push you to sell. We're here to help you. We talk to a lot of buyers. We talk to a lot of sellers. At least I do on a daily basis, including Sundays. So we have resources. Whether you're in Texas or Nebraska, we'll find you a realtor who are there to help you. I know we have a bad rep, but hey, 80-20 rule, 80% may be bad or 20% may be bad, but 80% are good, and we're here to help. So I want to stress that, hey, there's help out there, especially for insurance and property taxes, and we can guide you through it. So hopefully this was a good session. Please comment if you're watching a recording. If you have any questions, we're here to help you. Adam, you've had a lot of information. I'm glad you were my guest. If you don't mind, I'd like to call you back in a couple of months and talk further, maybe a different topic.
Absolutely. Yep.
With that, I'm going to end the show. And if you have any last comment, Adam, I'll let you say bye.
No, I appreciate you having me on, and I'll do this all day long. I know what you're doing on the YouTube, and you're doing a great job, and glad to be a part of it.
Okay, thanks. Well, thanks everybody for watching, and thanks, Adam, again.
See ya.
See you next week, 4:30 California time. Okay, end stream.